Okay, good evening, everybody. Welcome to the final webinar for BL 602. Here we're going to be having a chance to talk about some of the current events in economics. I should probably preface this by saying that my entire presentation burned to the ground last night at about 8 p.m., and I'm pretty sure most of you already know why. So thanks very much to him. I had to spend a bunch of time reorganizing my presentation to help make sense of these current events for you. So interestingly enough, we have had this kind of problem in the past, back in 2016, 2017, 18. So we'll have a little bit of a chance to throw back to some of that. But at the same time as commenting on current events, I think it's also useful to walk you through how to analyze the economic situation to understand where you are in the business cycle. So despite the disruption of the last 24 hours, which hopefully does not come to pass, but probably will, I'm nonetheless going to walk you guys through the presentation that I had built just to show you how this kind of analysis comes together so that we can get some idea of what it looked like on Monday before the other shoe dropped, so to speak. So the first thing to recognize is that it's particularly challenging to figure out what's going on in an economy at any given moment in time, simply because there are so many moving parts. If we were talking about a relatively small economy, that might be straightforward and easy, but Canada's got a number of different industries, very different regions associated with it, and so you end up having to ultimately try to make sense of a number of data aggregates across a large area. Because quite frankly, you can have a situation where the Maritimes are doing very poorly and the prairies are rocking, and you end up with a very average result for the country. So it's important to try to get a handle on what's at least happening in the big picture so that we can try to navigate it as managers and make appropriate choices for our firms based off of the kinds of things we expect to happen in 2025. So tonight, I'm going to try to help make sense of this stuff for you, shine a little bit of light on where we might be headed. Now, doing this type of thing is dangerous, not in the sense that I'm going to get beat up for it or attacked, but the idea is that making forecasts is the surest way to be proven wrong. So most people don't make forecasts. Most people are pretty quiet about, I don't know what will happen. I'm going to stick my neck out for you guys. But I understand that playing Magic 8 Ball is a very, very risky proposition. So you'll probably find that I don't take any particularly extreme views one way or the other, and I'm trying to stay relatively balanced about this. So quite frankly, I'm going to not try to make predictions about where the price of oil will go or whether you specifically should refinance your mortgage right now. It's just not going to happen like that. Also importantly, my wife, the lawyer, has reminded me to remind you that nothing I say is financial advice. I am simply providing information about the economy. You should do your own diligence and reach your own conclusion. Nonetheless, importantly, despite the fact that everybody says, do your own research, let me tell you how to do your own research. Pay attention to the things that are relevant and beware of gurus that are offering solutions but can't show their work. So in that sense, I've tried to show my work for you guys. And everything that I tell you tonight, I have lots of data to back it up, and I am happy to provide this sort of stuff. A bunch of this will be linked to you in the presentation once that's posted up on Avenue to Learn, though. So let me start off with a quick backstory, because that'll help to explain sort of how we got here and sort of why we are coming out of a pretty deep and significant recession. So everybody knows COVID-19 pandemic pretty much tossed the economy on its ass for a little while, and it's difficult for us to understand exactly how this played out. So I kind of want to walk you through our understanding of it according to the aggregate demand, aggregate supply model. But the basic premise, of course, is that too much transmission of the disease would have overloaded our healthcare system, which could have led to a complete collapse of our ability to deal with it. So in general, it worked out okay because hospitals didn't collapse, but this also created a significant problem whereby we shut down the economy and told people not to go to work, not to go anywhere or see anyone. So obviously, this creates a significant problem. The government at one point had actually mooted a 90-day suspension of debts because they thought maybe this will pass and maybe this will be a good solution. When they wargamed it, it turned out to be an absolutely disastrous problem that would have cascaded throughout the broader economy. So instead, they opted to send people a bunch of money in order to be able to service those particular debts. And that seems to work out okay for the most part. However, there were some real challenges. We ended up pushing aggregate demand up in order to accommodate low supply. But as supply came back online, we suddenly found ourselves with too much money in the system. And as a result, what we started to see very quickly was inflation. Generally, within about 6 months to 9 months after the US started to dole out massive amounts of cash to its citizens, and we were doing the same thing, we noticed that price indexes were beginning to rise significantly. We knew this would happen, right? I don't know why the Bank of Canada would tell anybody that they expect interest rates to stay super low for a really long time. We literally watched the government dump aggregate demand on the market in order to keep up employment, quite frankly, and to keep people in their houses. And we knew that was going to overshoot the mark. And we knew that would result in inflation. And the reason we were comfortable with it is because we know what to do about inflation. We know raise interest rates. The other alternative, which would have been let people get laid off en masse rather than providing this extra aggregate demand, would have been a significant problem that takes a lot longer for us to recover from. And so the calculus was made that, quite frankly, we can deal with inflation. It's painful, but we know how to solve that problem. If we end up laying off millions of people, this will take years to recover from. Whereas inflation, 18-month cycle. We know how to deal with this problem, and we did. It worked, quite frankly. When we take a look at the end results of our monetary policy to try to rein in inflation over the last couple of years, it worked. It did a very good job. We're back now within the Bank of Canada's target of a 2% inflation rate, give or take 1%. So that's a good start, right? We have gotten through what seems to be the worst of the particular economic crisis, because this is sort of the echo crisis after COVID was inflation. So we managed to get through that. It has been particularly painful for Canadians, even though we have not had a technical recession, which requires us to have 2 consecutive quarters of negative GDP growth. If we look at that GDP data on a per capita basis, we have had a significant decline in GDP per person over the last couple of years. Out of the last 8 quarters, we had 1 with positive GDP growth on a per person basis. So there has been basically a shadow recession happening. Individuals feel it, but it doesn't show up in the ECOD numbers, so the government can calmly claim that there's no recession, and it doesn't need to do anything about it. The truth is that over the last 4 years, our economy has grown about 12%, and the population has grown 11%. So if you wonder why there's more economic activity happening, it's not because you and I are necessarily buying more stuff. Most households in Canada are tapped out. The economic growth we've experienced in the last 4 years has been the result of new people moving in. And quite frankly, with the last couple of years with rising interest rates, anyone who had a variable rate mortgage dropped right out of aggregate demand. In general, people will get rid of their housing last. They will cut dance lessons, they will cut music camp, they will cut family vacation, they will stop eating good food, but they are not going to default on their mortgage. That is the very last thing that people do. It's a huge sort of admission of defeat for many people. And so in general, they will cut back everything else. Now, we might say, okay, well, that sounds reasonable, but remember, 1/3 of Canadians have a mortgage. The bottom third are too poor, the top third are too rich, the middle third have mortgages. And of that middle third, only about 1 in 3 of those has a variable rate mortgage. So about 11% of Canadian households have been bearing the cost of higher interest rates in the last couple of years. It has been very targeted on them, and anyone who's got a variable rate mortgage has felt a substantial hit in the last couple of years. People who are on fixed rate mortgages, as long as you refied back in 2020 or 2021 when rates happen to be low, you've been sitting pretty the whole time. However, that's going to come to a close in the next couple of years as you are forced to refi in either 25 or 26 at a higher rate than you currently have now. So one of the challenges that we face is that the household sector in Canada is feeling kind of tapped out, especially people who had variable rate mortgages. A lot of them have run through savings just to keep the house over their heads. So they're starting to feel a little bit of relief in the form of lower interest rates. But in terms of their overall wealth level, it's been tapped pretty hard, and it will be a little bit of time before they feel comfortable expanding their aggregate demand again. So another interesting view to try to understand how successful monetary policy was is to take a look at a monetary aggregate called M2. M2 gives us an idea about how much cash, currency, money floating around in checking accounts, savings accounts, things that could be used pretty quickly for transactional purposes. Normally, if we take a look at American data, M2 tends to rise at about 6% a year over the last 30 years, 40 years even. But what we had during COVID was a significant departure from that. In 2020, M2 did not grow by 6%, it grew by close to 20%. So there was a very substantial increase in the money supply in the United States. And unsurprisingly, within just a few months of us having a huge increase in the money supply, inflation follows. Because when you just add more money to the economy and not more stuff, of course, the price of all that stuff goes up. So one of the things that we've been trying to do is slow down the rate of growth in the money supply to let the real economy catch up. That happened earlier this year. So about the middle of this year, we anticipated that money supply would finally equal the anticipated amount we would have required if you go back 5, 6 years and make an estimate of how much money we need. Well, we're now at that level of money because we overshot the mark and then let it go sideways for a couple of years while we caught up. So you may have noticed that over the summer, central banks started to pump the brakes a little bit or reduce the rate at which they were cutting back on the money supply so that it would arc back up onto that sort of long-term trend. But we're there. We did it. Monetary policy worked. The money supply is back in line with the level of economic activity. So this should seem like pretty good news. Quite frankly, most of the arguments about restrictive monetary policies, that's over. We have solved the problems that we set out to solve. Now we have the next problems that resulted. For instance, if you want to get inflation under control, you slash aggregate demand, but slashing aggregate demand now has created unemployment, which is sitting at a relatively high number in Canada. Historically speaking, 6.5% unemployment is not actually very high. So anybody that is fear-mongering over 6% unemployment being a problem, I desperately encourage you to take a look at some historical data. It's pretty fine. Compared to 2, 3 years ago, sure, but we had a lot of excess money in the economy, so there would, of course, be excess employment, you might say. So now that we've got the appropriate level of money floating around in the economy, what we should expect to see is that over time, a little bit of economic growth is going to put these people back to work. And this is sort of what we're anticipating going forward into 2025. We've seen a couple of other economic indicators that suggest we may be hitting the bottom or recently hit the bottom of the economic cycle. One of those that's useful to monitor, it is a lagging indicator, not a leading indicator, is the unemployment rate. Which means if you want to know what's going on, don't look at unemployment. It doesn't tell you the future. Unemployment tells you the past. Now, importantly, in the past, the rate stopped climbing. It peaked out in August and then dipped down in September and October. Now, that's not a guarantee that this has now hit a top and is always going to trend back down. But after seeing the rate stop rising for 4 or 5 months, that seems to indicate that we have felt the maximal amount of pain from the conditions as we knew them. Interestingly enough, youth unemployment is down as well since a peak in August at 14.5%. It's now down to 12.8%. Typically, youth unemployment is about double the regular unemployment rate. So this is a good sign at the end of the day. We're not seeing necessarily a pickup in new hires. We're not seeing an expansion of overtime hours yet, though. So while we might be setting in the bottom, the turn towards expansion isn't quite there yet. Now, if we take a look at a particularly useful indicator, it's the OECD's, or the Organization of Economic Cooperation and Development's CCLI, the Canadian Composite Leading Indicator. What they do is they take a bunch of data sets which they have statistically determined are leading indicators of Canadian economy and ram them all together into a single index that seems to float around between 94.5 and 104. That has been the historical range. One of the numbers that we look at in that case is whether it's above or below 100. In general, if it's above 100, we've got an idea that things are moving towards an expansionary phase. If it is below 100, things are looking bad. We're currently at 100.15 as of the end of October. So we're at about neutral. But CCLI does seem to be trending upwards, so that may present us with an interesting opportunity. Queen?
Yeah, thanks for letting me speak. Just wondering, all this information you're giving us, are they covered in the material that you would upload? Because for me, they are very insightful, but at the same time, it's a lot, and you're trying.
Yeah. All this stuff is in the slides that I'm talking about. There's a recording of this is being made right now, so you'll be able to revisit all this stuff.
Okay, would we be able to visit it like maybe tomorrow or next tomorrow? Because
it'll probably be up tonight.
Oh, okay. Okay, that's good.
I'm generally pretty quick on the turnaround. Zoom ends takes 15 minutes to encode. I post it to Mac Video, loop it through to Avenue. So within a half hour of us finishing, it should be up.
All right. Thank you so much.
Absolutely. Now, importantly, oh, sorry, Williams.
Quick question.
Mhm.
Since I was listening to you, so lagging is to find out what happened before in the past, and
Mm,
leading indicator is to find out what's going to happen. How
yeah.
do we find out what's going on right now? What do
Oh,
we use?
I'm working on that.
Okay, all right.
Where we're at right now is the bottom of the business cycle. That means my expectation is that in the next 6 months, absent of Trump's disastrous tariff plan, we should have seen the beginning of an economic recovery, which would have led to expansion of aggregate demand. IMF and the Canadian government, unsurprisingly, are both anticipating GDP growth of 2.5% for next year, which is among the best in the entire OECD club. So things looked pretty good Sunday night. They looked pretty good yesterday afternoon, quite frankly. It's not that everything was great, it's that our trajectory was good. We were getting around the bend. Things were able to start turning around. Unemployment was starting to come down. Interest rates were coming down and putting money back into Canadians' pockets. And on top of that, the government was going to start giving away money. We've got the Ontario Conservatives and the federal Liberals handing out cash to buy votes. So at the end of the day, this should provide us with a little bit of a short-term boost in aggregate demand. So we had lots of reason to believe that 2025 was going to be better than 2024. And 2024 was better than 2023. So what's happened is we were kind of climbing out. And now with the new changes that may be coming down the pipeline, we're about to break through to the third basement. So I hate to be the bearer of bad news, but in case you haven't read the news today, if Trump's tariffs go through, pardon my language, but this is going to be a shit show. This is going to be a major problem for Canadian economy, period. So while things seemed to be going okay for us, we do face significant challenges ahead. So to circle back to where we were, keep walking you through how to do the economic analysis of this stuff. There are a couple of useful details along the way of different indicators that we can look into to try to understand where the economy is at. So one of these, of course, is to take a look at consumer confidence. Consumer confidence is often a leading indicator in Canada, and it's doing okay, but it's been declining since August. So even though we're seeing unemployment come down as a lagging indicator, our leading indicator of consumer confidence starting to come down. So that gives us a little bit of a negative signal for the future. Another thing that sort of gives us pause about rushing to re-enter the market, quite frankly, is that consumers haven't started to pick up big ticket items yet, and nor have firms. So firms are not necessarily making investment in long-term assets yet. Usually that happens when firms start to see that there's an expansion of demand on the horizon. They haven't put in a lot of new equipment orders, quite frankly. So when we take a look at the purchases of long-term assets, both among households and among corporations, they're still gun shy. We are not in the recovery yet. We are still bottoming out, is how we should interpret those particular indicators. When we take a look at housing, housing is particularly important. It's the single largest asset of the household sector. In fact, the whole sector is named after it. Importantly, a lot of houses in Canada are bought with leverage, which means, of course, that borrowers are subject to changes in interest rates, which will affect their willingness to purchase everything else. Now, one of the big challenges that we see is that housing prices have basically took a serious run up during COVID and then promptly fell right back down. If you bought a house 4 years ago, it's probably worth the same thing today. So that's a real challenge for Canadians, quite frankly. A lot of people's path to building their retirement nest egg is to buy a house with leverage, try to pay it off over the next 20 years, and enjoy the tax-free gains that come along with it. That's usually how people's retirement plan work. They try to stash some extra money, but they're trying to also buy a house and pay it off. The real challenge is housing prices haven't moved in 4 years. There was a early COVID blip, but then they came right back down. So anybody that bought at the top of that bubble in, say, January 2022, I'm very sorry. Everyone else, though, who has bought at all in the last 4 years has seen zero return on investment. And these people bought large-scale investments with leverage and have earned a 0% ROI. This is eating into Canadians' wallet. So that creates a significant challenge for us in terms of a recovery. A lot of the savings of people with variable rate mortgages have been exhausted, and we're about to move into a period where people who had fixed rate mortgages are about to refi at higher rates over the next 2 years. So there is headwind, right? On its own, we might see a little bit of a boost in early 2025 based off of government transfers, based off expected lowering of interest rates in the next couple of months. But in the medium term, if we start looking at tariffs and we start looking at having to refinance all the fixed rate mortgages at a higher rate, Canadians are going to start feeling real poor when it comes to discretionary purchases. And so we should be ready for this, quite frankly. Now, one of the other important indicators that we look at is housing starts. Housing starts have not increased in 3 years. They've stalled, and that's a major problem. If housing starts are sitting around 200, 250,000 a year, like we've had 170,000 in the last 9 months. But honestly, the population of the country has increased by over 1 million people in the last 9 months. So where the hell are they living? You can see the problem that we face. Housing starts have been wildly insufficient to keep up with our immigration. So unsurprisingly, that is what is keeping housing prices flat. Housing prices would almost certainly have come down given how badly Canadians' financial situation is, but there have been millions of people moving to the country, and we tend to filter them for having money, so they're able to buy those houses from distraught Canadians. And this has helped to keep housing prices at least flat. Under normal circumstances, you increase the population of the country by 10% and you increase its housing stock by 1%, you would see a significant increase in prices. We haven't seen that in 4 years. And that tells you that absent immigration, all those houses that people bought with leverage would be even further underwater than people are today. So that's an important thing to consider. For all the people who are screaming about the need to reduce immigration, and they're not wrong, know that that's going to take the wind out of the sails in terms of housing, and that means we should probably expect housing prices may start to tumble. And that's going to create significant problems in Canada as well. In terms of business level indicators, one of the things we usually watch is inventories, because demand adjusts a lot faster than supply. So what happens at the top of a business cycle is that business usually overshoots demand and inventories build up. Now, just monitoring the level of inventory is generally not enough, because over an economic expansion, inventory levels rise along with sales. So the really relevant number is sales to inventory. And in that type of situation, what we haven't seen is a significant change much in Canada. So we have not seen a decline in inventories per sales, which would be the signal that the expansion is in. Because just like companies overshoot at the top of the business cycle, they tend to undershoot at the bottom. Because they're gun shy about expanding capacity to meet expanded demand that might be illusionary, they usually wait until the fix is in. And the fix is in when inventory levels start dropping. And then at some point, when you got about half your inventory left, businesses ramp up extra production to restore that inventory and to catch up for incremental sales, and that leads to hiring. So the key thing for a turnaround, quite frankly, is to take a look at the inventory to sales ratio. And that's flat. It's not changing yet. There is no extra demand that is catching business off guard. So we don't have a recovery now. But with some of these positive elements, like possibly lower interest rates, some government transfers, we may see a little bit of a boost in the early 2025. But man, those tariffs are going to create a massive headwind for us, quite frankly. And there's not much that we can, quite frankly, do about it. So what I want to talk about real quick is the impact of tariffs on us. Because otherwise, absent of this, I would have happily told you guys that we are putting in a bottom on the business cycle, and that's by the middle of 2025, we should see a recovery beginning. There should be economic indicators, leading indicators in the first quarter of things turning around. But unfortunately, since last night, I have to tell you, it's about to get really bad. Canada is largely organized around exporting to the United States. 75% of our exports go to them. So the idea that we're going to magically find some other customers to replace them, that's pretty rich. A lot of our exports are integrated in the auto sector. So that's not really something that we can just redirect to Europe or to the Caribbean or to Asia. At the end of the day, a lot of that import-export data is car parts going back and forth. The Auto Pact is a major portion of our trade relationships with the United States, and that is probably going to be difficult and expensive for us unless we can secure some kind of carve-out on these tariffs. Additionally, we export energy to the United States. We sell them natural gas. We sell them oil. What's going to end up happening as a tariff on all of that is only going to make it possible for us to sell into the U.S. market, which is our only customer for all this stuff, by slashing our prices by the amount of the tariff. And that's going to push prices of Western Canada Select down even more than they're already, trailing West Texas Intermediate. Normally, the spread between WTI and WCS is in the range of 10 to 15 bucks, and we're in that range now. But quite frankly, if those tariffs come in, that spread's going to widen even further. And that's going to put a lot of pressure on the energy industry on the prairies. And so even though that has been one of our 2 functioning engines on our 4-engine plane, that could very well begin to stall once Americans decide, you know what, we frack. We frack and we got lots of oil and we got lots of gas in Canada. We just don't need as much of what you got. Too bad. It's also going to have a significant impact on our farm exports. Anything from wheat exports to animal products are now going to face a significant tariff entering the United States. And that means that things that we have traditionally done in order to supply them are going to lead to oversupply in Canada, which ultimately may help push prices down a little bit in the short run while we oversupply our own domestic market with domestic goods. But what it's going to lead to is business losses. And business losses is going to lead to a contraction of aggregate supply. So there may be a short period of time when we have oversupply and prices seem to come down in Canada and inflation may stay muted for a couple of months. Once those tariffs start to kick in, everything that we import from America is going to get more expensive too. Because historically speaking, we don't stand around when America imposes tariffs on us. Even during the last round, we imposed selective tariffs on America to try to pressure them and bring them to the table. Let's just say that Trump is feeling a little emboldened at the moment and may not be interested in striking a kind of deal with us in the same way. Some people have suggested, after reading about this stuff all day, that this is simply a negotiating tactic, that the business relationship between Canada and the United States is too important, and therefore America must be bluffing. I haven't heard anyone in America say that. The only people who say that live in Canada. So my fear is that that is really significantly wishful thinking. That would be ideal if it works out that way and we can negotiate our way out of these tariffs, but we should probably prepare for the worst. The idea that Donald Trump is bluffing, we should not take it at face value. What he said he was going to do in the first time he ran through office, he did it. And all kinds of other crazy things, quite frankly, from Sharpies of hurricane maps and all kinds of nuts stuff. So we should not doubt that he's going to do some crazy shit, quite frankly. The real challenge is that he actually has the political and legal authority to just ramp up tariffs at the wave of a pen. And that puts us in a very difficult bargaining position. We need to convince people to convince Trump that this is a bad idea. And this may prove particularly challenging for us. We have some skilled negotiators in Canada. Thank God Chrystia Freeland is still floating around because she did a pretty decent job arranging USMCA for us. However, it's going to be challenging for us going forward because the truth is we need America a lot more than America needs us. Pascal?
What's in it for the U.S. by adding tariffs?
Oh, it's stupid as crap. Quite frankly, it is economically stupid idea. If you talk to any economist in the U.S., they will tell you this is not going to make America better off. However, it's going to hurt us a lot more than it's going to hurt them. So is this a bully threat? Maybe. Does Trump not understand tariffs? 100% chance. He thinks that we are going to pay him to send our goods to America. He doesn't realize that Americans pay that tax to their own government. Now, of course, when we take a look at the macroeconomic theory around tariffs, the important thing points out that tariffs will automatically reduce welfare overall in a small economy. But the weird result when we look at tariffs is that a big economy could actually generate additional surplus from imposing a tariff. It can happen, but the way that happens is that they force down the world price of things they otherwise would not buy. They're fundamentally expecting that everybody else has to just maintain their supply because they've built these giant industrial plants. And therefore, the notion is that they will cut their prices in order to continue to access the American market. And that actually could make Americans better off in a weird way. Now, that's a hard sell, and it is absolutely beggar thy neighbor type of econ. It sort of presumes that everybody's going to be like, okay, America, take my lunch money, and has nothing to say about it. Will we have something to say about it? Canada probably won't, because we don't have a lot of alternatives. We have no patron waiting in the wings that is desperate to protect us from the most powerful military that has ever existed. We are at their mercy to a large extent, economically speaking, and absolutely we need them more than they need us. We're going to have to cut a deal, and it's probably going to be painful. If I had to guess, they are going to lean on us to end supply management across a number of different industries, which we conveniently were able to get carve-outs for during the Cold War. They are going to pressure us to end our cultural subsidies. So like money to the CBC, Canadian content on the radio, they're going to push us on all that shit. They're also going to push us hard on defense spending. Our defense spending is about 2/3 of what it should be. And interestingly enough, the majority of our defense spending is pensions for people who used to be in the military. So it's not like we have a lot of kit that we're working to maintain. We have painfully thin kit for a country of 40 million people. And we have interesting needs for it in the north as global warming frees up the Arctic to some extent. We should absolutely expect other nations to just start sailing container ships and other ships through the Northwest Passage unless we are willing to stop them or put some kind of tariff on them for transiting our territory. If we don't have any military, we can't do that. Right now, we rely on America, our big brother, to basically protect us from bullies. Notice what happened when we said, hey, India, please don't kill our citizens in our country. We're friends, right? India told us to pike it. And that's what happened until America said, hey, India, take a step down. Canada's our boy. Australia harassed India about it. And so India's figuring out how they're going to respond. But their general attitude is, we're a big country, you're a little country. Sit down, pipsqueak. And that's exactly how America is going to treat us. And then some. So buckle up, Canadians. I hate to say it that way. It's going to be rough in my estimate. We may, with our skillful diplomats, be able to negotiate a fair deal with Trump, but he is going to demand a lot of shit of us. We are going to lose things we are used to having. And we are going to find that our government budget is stressed. If we have to increase the allocation of our government budgets to increase on military spending, and we've got to deal with the effects of a recession, an even deeper recession at home induced by tariffs, this is going to be bad. Our government is going to run bigger deficits than they have been. Our deficits were going in the right direction. We were expected to be in budget surplus by 2028. Not anymore. This is going to plunge us into a really significant recession. RBC Economics made an estimate of what a 10% tariff would do to us this summer. They estimated it would shave off about 2.5% of GDP over 2 years. Given that we were only expecting 5% GDP growth, a 10% tariff was supposed to wipe out half our economic growth. 25%, there's nothing coming. We're up shit creek. We're going to get real recession, and on a per capita basis, it's going to be bad. So honestly, save your money. It's not going to be good out there. That's my best estimate. Now, I just noticed that the chat's lighting up, so let me take a quick look at some of these messages. And Bill says Trump's rationale for tariffs didn't make any sense either. Stem the flow of illegal immigrants and drugs from Canada to the U.S. Pretty sure the flow is in the opposite direction. But like you said, political posturing to renegotiate on favorable terms to the U.S. Yep. And they're going to get their way. They're going to push us around. They'll make up some stupid ass story. They'll gaslight us about our illegal immigrants rushing to the States. And they're just going to force this on us, no matter what it takes. This is going to create big problems. So Miguel asked, how do you protect your assets or wealth in a crazy situation like 25% tariffs? Write it out till it's over? You could. What everybody did last night was immediately switch their Canadian-based assets to U.S.-based. Canadian dollar dropped 1.2% against the U.S. dollar last night. So everybody sold their Canadian dollar stuff. TSX gapped down this morning, so that's not a surprise. People are selling off their Canadian stocks because they know Canadian stocks who have had a good run this year are about to have serious problems. And as a result, people are moving out. People are just moving out of Canadian assets. This will probably continue over the next month or so. Right now, people are precautionarily moving some of their money because Trump saying some shit on the internet doesn't mean it's going to be U.S. government policy yet. He's going to try to make it U.S. government policy, but it does not necessarily mean that's what he's going to do. He's an old man. He could have a stroke before the end of the month, quite frankly. So we don't know where this will go, but we should prepare for the worst case scenario. Hoping that this is a bluff or that we'll just sneak out from under him through negotiation. Wishful thinking. Only Canadians are talking like that. And I'm going to guess that a bunch of those have variable rate mortgages. Stacy said, how long would it take to recover after his 4 years? It depends. It very much depends on how long those tariffs stay in place. There is a very long tradition of tariffs in the United States. The U.S. typically maintains tariffs against the rest of the world and only did away with that as part of their international strategy post-World War II to keep the Russians in Russia. There's a couple of useful videos. I'll put the link to it in for you guys in the chat. They're actually videos I recorded a few years ago for Financial Post when Trump first came into office. And as it turns out, everything I talked about is once again relevant. So it'd be useful to have a look at that. One of them is they were asking me whether we can believe Donald Trump and whether necessarily this was going to be a problem and if we needed America. So I pointed out to the host of the interview at one point that when we take a look at total imports and exports as a percentage of GDP, America sits right near the bottom of the international leaderboard. They are in the same region as North Korea in terms of the amount of trade as a percent of GDP. So the truth is that America might trade a lot in terms of total dollar amount, but in terms of the rest of their economy, this is a largely self-contained economy in the United States. They have a very large geography. They've got a really good endowment of agricultural land. They don't need the rest of the world nearly as much as the rest of the world needs them. America is largely energy independent. They can feed themselves. You might say, what about, critical rare earth materials? There's lots of that in America. It's just far more expensive than buying it from China right now. So could America pull off autarky? Yeah. They are one of the very few that could reasonably try to pull it off. The problem is if they pull out the whole cornerstone of the international system, it's going to cause major disruptions to the national strategies of dozens of countries around the world. The whole international system is in play effectively. I hate to sound alarmist, but the U.S. built the modern international system post-World War II in order to contain the Soviet Union. Their strategy basically involved bribing up an alliance at both ends of Eurasia to keep the Russians in Russia. And the structure of this bribe was export your way to prosperity. You have access to the U.S. consumer market. We have half the global consumer market in 1945. And since your countries are broken, here's a bunch of money. Export some stuff to us. Put your people to work. We don't need access to your markets. You need access to our markets. So you can have access to our markets, but you line up behind us on defense. And that's how they ran this stuff until 1990. They basically reconstructed Japan and Germany, the countries that had been devastated as a result of World War II. Within 40 years, were economies number 2 and 3 in the world. Right? So it worked really, really well. This idea of just access to the American consumer market and exporting to prosperity was done several times in the 20th century. In fact, that is the modern rise of China in the last 40 years, quite frankly. So the challenge is America really afraid of the Soviet Union anymore? Oh, wait, there is no Soviet Union. Is there a giant ideological battle between capitalism and communism? Nope. Okay, so why exactly is America supporting all of these countries all around the Eurasian rimlands? It's hard to make the argument that they should keep doing it. Like we laugh sometimes at America for, oh my God, look at your giant military budget. That giant American military budget protects all global shipping. Right? We should remember that sort of thing, that America's giant, global cop presence tamps down a lot of wars that might otherwise have broken out. History did not end, but America effectively put a blanket over it for like 50 years and just set it aside. And that is now changing. Importantly, one of the things to keep in mind is that it's not Donald Trump that is driving this. He's a symptom of what's going on. America is redefining its strategy for the first time in a long time. And America is looking around and saying, you know what? That was a big waste of time in Afghanistan. We're not going to do that. You know what? That was a big waste of time in Iraq. We're not doing that. You know what? We're not in the business of sending 500,000 troops to anybody else's country. What new American military intervention looks like is we are going to flood the zone with weapons. We are going to give weapons to other people, and the locals are going to fight for their own freedom. Americans are not going over there to do it. This is a radical departure from what the security architecture was for half a century. And people are trying to figure out what exactly they should do about it. If Trump does, what he says he's going to do and say, abandon NATO on day one and slap 25% tariffs on us, the whole global system is going to be upended. A lot of countries have developed, like Canada, have developed their national strategy predicated on the American international structure that we have had throughout the entire Cold War. It just stayed on autopilot over the last 30 years, but our whole strategy is predicated on it. It's predicated on the fact that America needs us. You know why America needs Canada? Because the Russians during the 50s might have flown strategic bombers over the pole, and they wanted us to shoot them down with jets. So they mattered. They needed us in order to be able to stop Russian bombers from reaching America. And while that was the case, they were happy to help Canada in a lot of ways. And we got a lot of trade carve-outs because we had these security arrangements with them. We live in the ICBM age now. The Russians aren't going to fly bombers over Canada to hit U.S. cities. They're going to launch ICBMs with MIRVs. And that'll be the end of that. So America doesn't need Canada as much as Canada likes to pretend America needs us. We are definitely going to have to think very carefully about this. Notably, this is not the first time that we have had trade with America that goes badly. When this happened last, we were not even a country. There was a treaty in 1854 called the Reciprocity Treaty between British North America colonies and the United States. It was part of our national strategy for dealing with the repeal of the Corn Laws, where we used to have access to the British market on a preferred basis, and Britain had tariffs against everyone else. So we would just dump all of our products on them. When they got rid of that, all of a sudden Canadians didn't have preference in Britain, and we immediately reorganized towards the United States. In fact, it was so bad, in 1849, a group of people tried to get the United States to annex British North America. There was a big petition among the people of Montreal. The people in Montreal were so pissed off at the British Empire, and they're like, fine, British Empire, we feeling betrayed. We'll join the Americans. How do you like that? Ultimately, nothing came of it, but we did get the Reciprocity Treaty out of it, which enabled low tariff trade, almost free trade, you might say, between Canada and the U.S., or proto-Canada and the U.S. for 12 years. In 1866, though, the Americans had had enough of that. They were like, okay, it's the end of the Civil War. We need reconstruction. And you know what we're not going to do? Take a bunch of Canadian imports. So tariff time. We will rebuild ourselves from within, and everybody else stay the hell away while we rebuild and we expand into the West. And so we ended up in this sort of jockeying policy of raising tariffs against each other. This was John A. Macdonald's national policy. He wanted free trade with the Americans. The Americans said no. And so as a result, he was like, fine, we're going to tariff you back. And that went on for half a century. In 1911, we had an opportunity to establish free trade. The Americans came to us and asked for free trade. And it was Canadian manufacturers that pressured Wilfrid Laurier not to do it. They ran it on an election, and he was hoping to win again and did not. In fact, Canadians decided they did not want free trade with America and shut it down. And free trade with America became a dirty word until the 1980s. So the last time we had this kind of crazy shit happen with America, it was 1850s. So there were no people alive with memory of this. All we can do is read history books and try to figure out what happened and how it happened and how we dealt with this kind of problem, because no one alive has dealt with this problem, at least in terms of Canada and the US. We haven't had a 25 or 30% tariff with America since the end of the end of World War II, really. They systematically brought down tariffs all across the world in order to bribe up this big alliance. But since they don't need the alliance anymore, it's now tariff time in America, and that means we're actually reverting to a pre-World War II trade world with them. That's going to be expensive. And we lack a lot of expertise for knowing how this is going to go. So to jump back to Stacey's question about how long will it take to recover, I don't know that it's going to grow back. We will grow around it. We will find other ways to expand the economy. But the idea that we're just going to get America back someday and that we're just like temporarily estranged from them, maybe. It would be dangerous for us to plan around the end of tariffs. It would be naive for us to assume that America is not changing its attitude towards Canada. When America was free traders, low tariffs, it made sense for them to integrate with Canada and Mexico. But if America's pulling up stops on security and America's pulling up stops on trade, we should not keep playing the same national strategy we have been, which fundamentally puts us in a position of reliance on them. It will take a long time. This is going to be significantly damaging to Canada, and it will be a real challenge for us to grow around it. Now, Sarah asked, what will be the effect of tariffs on Mexico and China compared to Canada? Oh, it's going to be terrible there, too. Importantly, though, China has less of their economy focused on imports and exports than Canada does, interestingly enough. A lot of people think that, oh, China needs imports and exports all the time. Yes, they do import a lot of important critical materials. And yes, they do export and earn a ton of money. There is a massive domestic economy in China that people seem to blithely be unaware of unless they've just been to China. And then when you see it, you're like, oh, okay, there really is a lot going on here. There are hundreds of millions of people living middle-class lifestyles from the West. Yes, there are also hundreds of millions of very poor people, but there's a lot going on there, quite frankly. So their domestic economy should be able to help them weather things a little bit. The challenge is that China's domestic economy doesn't have a lot of wealth behind it yet. Some people have a crap load of wealth, but the aggregate level of wealth in China, not so deep. Canada can absorb losses over a longer period than China necessarily could while maintaining our standard of living. What will the Chinese do with Trump's tariffs? They will raise their own. They will absolutely raise their own. There is no reason for them to back down on this. They have an economy almost the same size as the United States, and they too can win at tariffs if that's what they want to do. The challenge is if the Americans go into tariffs and the Chinese go into tariffs and the European Union responds with tariffs, we're all screwed. This is all just going to get really expensive across the board, and we're going to go back to a period where the incremental gains of global free trade are simply rolled back. And that means a reduction in people's standard of living. So this has potential to get pretty rough compared to what we were used to. Our expected trajectory is about to get interrupted, and we may see slower rates of growth in the future. So should we try to get this back? From an economic point of view, yeah, it would be awesome. Free trade is quite good for the overall economy. Maybe we could do it better in a way that isn't harmful to as many workers. Absolutely. There are ways to improve this. But going back to a purely autarkic world where Canada makes everything that Canada needs, we're just going to be poor as a result. One of the things to worry about is that if these tariffs are high, and if we end up retaliating with high tariffs, this could create inflation. And that could drive the Bank of Canada to have to raise rates again. And that will definitely take all the wind out of Canadian household sector's aggregate demand. So even though we seem to be doing okay, we seem to be putting in a bottom on the last business cycle, and we seem to be on our way out of it. Yesterday's news absolutely upends this. And this is the new theme we're going to have to worry about. We've known about this since Trump won the election, but I think a lot of people were just sort of hoping it wouldn't come up. It has, and we have to deal. Next questions. Vibhav asks, could a change in Canadian government make any difference? No. Anybody who thinks, you know what, Trump really likes Pierre, that's going to work. He'll get rid of tariffs based off of a Canadian personality. We're dreaming. We're absolutely dreaming. Now, is it possible that Trump tries to sort of cajole Canada into putting a different leader in place? I could see someone on Trump's team thinking up that kind of strategy. Trump's not that strategic. At the end of the day, the man understands vulnerability and he understands threats, but he doesn't understand economics very well. So if we start talking about Trump having an economic strategy that turns into a political strategy, I don't really buy it. In terms of a change of government, he would not like the NDP any more than he likes the Liberals, and he isn't going to like the Conservatives any more than he likes the Liberals. If you think lining up against woke is going to save us, not a goddamn chance. This is economics. This is not culture war. So anybody that thinks they're just going to get on the same culture war team, it probably won't happen. We did see an inkling of that Canada was happy to throw Mexico under the bus, though. Over the last week or so, we had all of the premiers of the Canadian provinces and territories get together on a call and decide that Canada needs to have a bilateral trade deal with the US that excludes Mexico. Maybe we can set up a separate side deal with Mexico, but we should be focusing on having a bilateral deal with America. That's not economically very smart, quite frankly, but what it does smack of is, yeah, America, we also don't like Mexico, right? And like, that's literally what the play is at this point. They're just like, please, any strategy to keep Trump from burning us down. We need them to think of us as being on the same team. And that's sort of the premier's play. They're like, oh, are you mad at Mexico? Cool. We're also mad at Mexico all of a sudden. Please, Donald, please, is sort of the play. It's a recognition that we're in a vulnerable spot in Canada, that there is no good strategy other than trying to throw Mexico under the bus and seeing if Trump likes us more as a result. Change of government, it's not going to change the economic reality. Most important, remember, America's strategy is not based on Donald Trump. Donald Trump is a symptom of America's changing strategic priorities. And that means personalities don't matter here. If America has decided it's onto something else and it doesn't need Canada for that plan, we better work really hard to make ourselves valuable to them, quite frankly. We need them a lot more than they need us. So Puneet asked, which industries or sectors do you see getting impacted the most due to tariffs? I read an article from Financial Post that said imposing tariffs would be bad for both economies. 100%. Absolutely. It's a dumb idea. Trump's not doing this because it's smart. Trump's doing this because he wants to bully Canada on trade. He wants to use this as much as he can to try to extract concessions from us. Maybe we will, maybe we won't. But this is probably not a bluff. Is it a negotiating tactic? Maybe. We shouldn't plan on that. In terms of which sectors are going to be most impacted, I would say agriculture. Agricultural exports to the United States are going to have a bit of a problem. Energy is going to be a problem. Margins are going to tighten up all across the prairies in terms of energy exports to the States because we're going to have to underprice in order to get into that market. We cannot export 4 million barrels of oil a day to anyone but America. So given that we can't turn off these oil wells, we have to underprice it for them. So that's going to really hurt. Alberta is going to run into some challenges, so Saskatchewan in that regard. Manufacturing has a very significant chance of being disrupted in Ontario. The Auto Pact has ensured that for decades and decades, we have been building complementary industrial plant right across the lakes from America. If we impose a 25% tariff on that, this all goes away. I don't mean to say that all the factories are shuttered tomorrow morning or any of that sort of thing, only that the economic rationale of integration disappears, and we may find ourselves with the ability to make a whole lot of dashboards that America doesn't buy from us anymore. And that can be a really significant risk. There is a very real possibility that our auto sector is going to need to retool around the possibility that America is just not going to buy our stuff. So I would say agriculture, energy, manufacturing, those are all up in trouble. Andrew asks, how will tariffs impact US-based companies that have manufacturing in Canada and Mexico? As far as I understand, goods moving across the border will pay the tariffs, whether we're looking at a US-based company or not. If you manufacture in Mexico and you send it across the border to America, tariff. If you are an American company operating in Canada and you manufacture something in Canada and it crosses the border, tariff. Will they have carve-outs and exceptions? We don't know. This was like a late night sort of, I'm on the toilet post from Trump, right? This does not appear to be well thought out. There are not a lot of details available. No one from his team has spoken about this or provided any details. So we actually don't know how this is going to play out. What we do know is that if that threat is real, it's going to get bad. That's what we know for sure. Pascal asked, any perspective on why tariffs are higher for Mexico and Canada than China? There's already a bunch of tariffs on China. And so what they're doing is adding an incremental 10% tariff on top of everything else that already exists on China. That's a key part of it. Another part of it is that America might recognize that what they get from Canada, they produce themselves. And what they get from China, well, not everything can be made themselves. So they'd rather keep the price accessible to them. So I suspect that's part of the reason. Also, they are pretty sure they can bully Canada, and they're not so sure they can bully China. Bojan asks, should Canada look to increase trade with countries other than the US? Of course. Absolutely. Can we please do it? The problem is it's really expensive to ship stuff across the ocean. The reason we have so much exports is because America is literally right there. I just have to like throw stuff over the fence and it's at their house. So it's cheap to ship to America. It would be really expensive for us to pretend that we could just send our unrefined oil products to someone in Europe to refine. We don't even have the refining capacity in Canada to handle the oil that we produce. Most of that oil we produce is sold to Americans so that they can refine it on the Gulf Coast and then ship it back to us as refined product. If we don't ship that crude to America, I don't know where we're going to refine it. We could build a refinery in Canada. Cool, 8 years from now. There are real problems that we face in this regard. So yeah, it would be awesome if we could increase our agricultural exports, but we're up against some pretty big agricultural countries too. And remember where most of our agricultural exports are located. Our farmland is in Ontario and in the prairies. That's really easy to access the American market, but it is, I don't know, a few thousand miles of land and then a few thousand miles of ocean away from anyone else that isn't America. So will we divert some trade? Sure. But the idea that there's going to be enough people to make up for America's reduced demand, there's nothing there to support that. We're in trouble. Alexander says, could BRICS and fear of BRICS growth with more countries joining and that impact current U.S. economics to prevent tariffs? The U.S. economy is bigger than all the BRICS economies put together. America is not afraid of BRICS. Keep in mind, BRICS puts India and China on the same team. They don't share any geopolitical objectives. This puts Russia and Brazil on the same team. They share zero geopolitical objectives. This is not a military alliance. This is not a currency-based trade bloc. This is a talk shop for people that are like, it'd be nice if we could influence America, but individually we can't. So let's get together and at least try to convince them that half the world's population ought to be taken seriously. That's the best that they've got, quite frankly. The truth is that BRICS is very unlikely to turn into any kind of military alliance. What does Iran have in common with South Africa? Nothing. So it doesn't form a coherent trade bloc. It doesn't even form complementary series of economies. Remember where BRICS started. BRICS was an acronym that was invented by a Goldman Sachs analyst who said, these big four economies that are developing markets might make an interesting semi-diversified basket of economies to invest in. That's it. Finance said that they'd make a good portfolio. That's it. They have no international or economic strategy that they can necessarily bring together to resist America. It's a talk shop. I don't put a lot of faith behind it in terms of being able to convince the Americans not to levy tariffs. Miguel asks, he says, I listened to a podcast that tariffs sometimes don't even work when they intended, as there is a massive workaround. Last time Trump was president in 2018, some Chinese companies have been shipping into this low tariff country, Thailand, and then shipping to the US. You know what America is going to do? They're going to slap a big fat tariff across the board on everyone in the world. So the backdoor sneaky plan, it's not going to work. I doubt it very much. America's aware of this. They know how people are beating their tariffs and their sanctions, and they keep tightening up. This was actually one of the concerns with Canada. Even if we could convince Trump to bring us in from the cold and let us be part of the American team, they're likely going to insist that we impose the same external tariff wall on everyone else to prevent re-exporting through Canada to the US market. So we might get America, but we're probably going to lose everyone else in the deal, and that will subjugate us to them even further. It's a real challenge. Tariffs might not work, but I got a pretty good feeling that they do by reading through history. It will require countries to adapt their national and export strategies at the end of the day. All right, Michelle said, I read that the oil we export to the U.S. is very specific, and the U.S. cannot process a different oil overnight, and realistically, the U.S. will not invest in equipment overnight, so frankly, the U.S. May be in a lot of trouble as well as in the short term. The best way to think about it, a few years ago, America realized it didn't need Canada's oil exports anymore because it was going to frack so much oil that it was irrelevant. And so they actually spent roughly $1 trillion retooling all the refineries on the Gulf Coast to stop dealing with heavy crude that they were getting from places like Venezuela, and they went to almost sweet light crude. The kind of sour crude we get out of Venezuela is like thick tar. The kind of oil you get out of fracking looks like scotch. So you have wildly different levels of impurities between these two things, and a lot of the U.S. Refining capacity shifted over to being able to handle this super sweet light crude. We in Canada pressured them as hard as we could not to go all the way. And we were like, come on, but we're friends. You can blend up this scotch with some of our tar and make middle road stuff. And we managed to succeed to some extent. Americans were like, yeah, okay, I guess that's true. You can send us some of your stuff and we'll just blend it all up with our sweet light crude. Do they need it? Not obvious. Could they replace Canadian oil with other people's oil if they wanted to? Yep. Will they? Probably not. But what's going to happen, even if they do continue to take our oil, is we're going to have to sell at a significant discount from where it is today. We're going to end up selling our oil for probably $5 to $10 a barrel cheaper than it is right now. And that's going to really hit the bottom line of a lot of energy producers. Lydia says, when I saw the headlines, I thought it was Trump keeping up the narrative again about making America great by prioritizing domestic firms through limiting international competition via tariffs. That's correct. Keep in mind that America's economy, under all of the tariffs in the 18th century, did fine. They are one of the few geographies in the world that could actually pull off autarky if they wanted to. Could they be incrementally a little bit richer with trade? Sure. But they'll be just fine without it. The rest of the world, we will be poorer as a result. So the truth is that we do need America more than America needs us, and they know it. And so we better find a strategy that endears us to them so that we can get back in from the cold, because it's not like we have a lot of geographic options, quite frankly. Allison said, Trump once mentioned using tariffs to replace income tax as a source of government revenue. I don't know that Americans would buy that much in terms of imports. If we take a look at the total amount of imports into America and we assign a 25% of that as tariffed, that doesn't make up even half of the U.S. government budget that comes from income taxes. So those tariffs would have to get pretty extraordinary, and American citizens would have to be willing to pay it in order to generate enough revenue to replace income taxes. Quite frankly, that is wishful thinking. I understand where he's getting it. Somebody told him in the 1850s America had no income tax, had tariffs, and the economy was good. What they're neglecting is that there is no half a continent to steal from native people anymore. There are no opportunities to just like grab a whole crap load of land and resources from other people. We're not in that situation. So the notion that America necessarily will suffer under tariffs might be a little bit true, but we have to keep in mind that the American government did a lot less in the 1800s. They didn't maintain a global security footprint. They didn't have a social security system. They didn't have Medicare. They didn't have Medicaid. So the funds necessary to run that are a lot more than they could pull off in terms of tariffs. So the idea that he would cancel income tax entirely and replace it with tariffs, unlikely. Could he fade income tax a little bit and replace it with tariffs? Yes. That may be our future. It's hard to say. So Agad said, if America doesn't negotiate and does end up imposing 25% tariffs, what are the possible reasonable steps our government could take? I can't offer any recommendations. I understand trade, but I am not a trade negotiation specialist by any stretch of the imagination. The very best thing to do, call Chrystia Freeland's office. Ask her what the plan is, because they're going to put her in charge of negotiating that again, almost for sure. She did a very good job with USMCA. We can expect to see something similar again. So what could happen? Canada could impose retaliatory tariffs. We could follow the John A. Macdonald playbook and be like, yeah, 25% tariffs on you too, sucker. And that will impact America a little bit. But at the end of the day, we are betting that American businesses pressure the Trump administration into not having those tariffs. That's a very questionable assumption. It may be that that's how it works out. I would not bank on it. It's not clear what the best policy for our government is. We're going to try a few different things. Mostly, we're going to try to buddy up to America real bad. If that fails, we're going to try to play hardball, and we're going to be like, fine, we'll make it work for ourselves. We're not going to become America's, subservient nation, and that means at the end of the day that Canadians are going to have to eat crow. It's not going to be good. But if we want to maintain an independent nation, independent policy, we may very well just be forced to accept more difficult economic conditions. So they ask, could you see other nations getting into a tariff war to encourage consumers to purchase domestic first? 100%. This is what happened during the Depression with the Smoot-Hawley tariffs. America slapped up big tariffs and everybody else retaliated with big tariffs, and global trade collapsed by 90%. It was bad for everyone. Read the wiki entry. It's terrifying. Next question is, what industries do you think have the best chance of avoiding tariffs from Trump? What is America reliant on us from? Even if they're reliant on us, they may still impose the tariff. Right? Do we produce absolutely anything that America cannot produce itself? Comedians and maple syrup. We're really good on the comedian side of things. We produce lots of them on a per capita basis. We have way more funny people than America does. In fact, a lot of people think that American or actors they see in American movies are American. There are in fact lots of Canadians. So we got that. It'll be hard to replace because we're kind of funny, I guess. Otherwise, maple syrup, because it has a specific geographic association. It can physically only, the kind of maple that tastes good only specifically grows in a very, very well-defined piece of geography. And like 85% of that's in Quebec. So as it turns out, we supply that. What else do we supply that they can't get out? Air defense over the North Pole. Yeah, that's about it. There isn't much that we do that is uniquely Canadian that Americans can't replicate. And that's a major problem for us. Can we ship the import to other countries who also suffer from high tariffs? Yes, but we still have to ship this crap across the ocean. It's cheaper to buy avocados from America because we can just truck this stuff. We can move it by rail. On the other hand, if I have to start importing, fruit from another continent, it's going to be more expensive to get oranges in the winter, period. I got asked, is it likely to result in an exodus of people to the U.S., especially professionals and all new skilled immigrants? If you think America wants a bunch of immigrants, remember their complaint about us? That all kinds of people were flooding across the border? America is closing the drawbridge. In fact, this is awesome for Canada. If we could get enough housing, there's going to be a shitload of very smart people that are no longer welcome in America, and we have the opportunity to attract them to Canada. If there's any play we can make that is really smart, we need to get those immigrants that otherwise wanted to go to the States. The problem is we've just soured on immigration in the last year because we didn't build enough damn housing. So one of the things that I do see in terms of housing, we have a major permanent problem with housing here. We can resolve it, but it's going to take a decade, and we better start right now. The truth is, there are two ways to get this housing built. We can try to create some incentives and basically bribe up existing construction companies to stop building McMansions with 5 bedrooms in them. People are getting married at 1/3 the rate they did in the 60s. They are having children at 1/3 the rate they did in the 60s. So this idea that we need to build a bunch of 5-bedroom houses in the 905, people don't need that. That's not what most people need. They need single-bedroom apartments that are affordable near where they work. This is what people really need. They need single-person dwellings because the rate of marriage and couple formation, family formation, way down. The birth rates of children, way down. Why do I need a $1.5 million house in the 905 with 6 bedrooms? I don't. But the construction companies make the most profit off of those. And so this is what they're incentivized to create. So we can try to adjust policies to get them to build more low-income housing. We can try to adjust these policies to encourage people to build apartment buildings. We are not doing that yet. The other alternative, quite frankly, which is a terrible shock, is the government can just take a bunch of that money and just build the damn houses themselves. Where are we going to get all the skilled workers? Easy. If you make me the Emperor of Canada, I'm going to import 100,000 Mexican home builders and tell them they can stay in Canada if they build 2 houses, one for them and one for someone else. Easy peasy. We just need to bring in the people that we need to build housing. That's the key thing. And housing is going to get built, whether we encourage other people to build it as contractors, or the government just forces the contractors out of the way and says, like it or lump it, we're building a bunch of low-income housing. We do have a model for low-income housing run by the government. This is not some crazy communist bullshit. The British do this, and it's called council housing. They build a bunch of low-income housing. The people who live there are able to rent to own those buildings. Profits from council housing is reinvested to make more council housing on a continuous, ongoing basis, and that's how it works. We could replicate that. The challenge, of course, if we think about this for just a second, is that if we want to increase the supply of housing, what do you think happens to house prices? They be coming down. So not only do we have a situation where people are tapped out of income and people are going to be forced to refinance at a higher rate, and we're moving into economic headwinds in terms of our exports to the United States, and we're reducing the number of new immigrants here who might keep housing prices up, and we've got a government that is likely to create incentives to expand the supply of housing. Housing prices go in one direction. How fast and how soon? I am not making a call on that. All I can say is that economically speaking, we are not going to tolerate this imbalance in housing for much longer. We will do something about it, and we can. When war broke out in Europe in World War II, we built tens of thousands of airplanes in Canada. If you don't think we can build tens of thousands of houses, you're not reading history. Alicia said, can an influx of purpose-built rentals help mitigate the loss of equity on ownership housing? No, man. Housing prices come down and equity is going to fall. So, of course, the Bank of Canada and the government is cognizant of this. They're not unaware, and they know damn well that if they crash housing prices, it's going to precipitate an economic crisis and maybe even a revolution. So they have absolutely no interest in playing with fire. The best case scenario is that housing prices are flat for the next generation while wages catch up. That's probably what we can look forward to. And that means if you're looking to buy a house, don't expect a lot of ROI on that thing, because we are going to increase the supply and we are going to try to find national strategies for reducing the cost of housing. And that means if you're sitting on a house that just made a huge run up from 300,000 to 1.3 million, it might be time to reevaluate that hold position. So God said, paradox, that our government is instead increasing development charges compared to previous years, halting construction even further. Many condo projects in Toronto are on hold. That's true, but a lot of those projects are on hold because they were financed at ultra low rates, and all of a sudden they're just not worth doing at higher interest rates. So part of it is, you might say, government and zoning. Absolutely. Another part of it is the fact that a lot of our real estate contractors went in with as little capital as they possibly could in order to try to build these things. We have, Canadian Evergrande, effectively. We have companies that have gone in with as little cash as they possibly can to maximize their leverage. And if anything at all goes wrong, they have to stop construction. And that's what's happened in Toronto. Okay, so sorry to be the bearer of bad news. I was really, really hoping to run tonight's session and tell you guys that we were hitting the bottom of the economic cycle and that next year you could look forward to economic growth on a per capita basis and that things were going to start turning around throughout next year. I don't have a good news story, guys. Trump robbed me. Sorry.